Hi everyone, welcome back to Be Rich. It's me recording remotely from Dubai again. So today, if you notice, the Japanese market has gone through the roof, and for the simple reason it is the Prime Minister they seem to have chosen finally. And the Japanese market, if you see over the last year or even 6 months, if you've been investing from the lowest depths, from the tariff threat, it is almost up 50%. And the reason why this turnaround is there remarkably in the Japanese stock market is thanks to the stability which is being offered by the government which has been formed. For the first time, they're going to have a female prime minister in the Japanese country, and this is a remarkable feat for them. It's taken them this long to get a female candidate as a prime minister. We Indians have managed to do this some time back. Of course, I'm talking about Madam Gandhi. So, but that is also not the only reason to cheer. The main reason to cheer is it's offering stability, and she's a conservative leader, and her views on the interest and inflation is very hawkish, like Anand was saying. So this is bolstered where the Japanese domestic policies are going to be aimed at. That coupled with what is happening in the US with the shutdown, which is continuing, and there seems to be no break in the impasse between the Democrats and the Republicans. It is very confusing right now, the way the world is positioned, like I was talking over the weekend. And if you see, this seems to be continuing and bleeding into this week too. So this week is going to be an interesting week, more interesting than last week, which was itself a very interesting week. I know I seem to be talking in circles for the simple reason is it is very confusing even for people who have been observing these kinds of markets for quite some time. So I would advise you to be cautious and not get carried away with exuberance. And if you do have any FOMO, which is quite possible, even looking at gold, which is moved by 1.5% in the international markets, breaking 3,900 and looking like it's going to touch 4,000, not even, I would say, end of this month. It's going to be happening in days. At the velocity, it seems to be picking up because of more uncertainty surrounding what is happening in the US and the dollar. So the speed and the velocity of the degradation of the dollar, thanks to the uncertainty in the American market, we can expect gold to cross 4,000 very soon. The only reason you're going to see any kind of pause in this could be some small profit booking, which is very doubtful because this rally is not being fueled by retailers or investors. This rally is being fueled mainly by central banks who seem to be wanting to distance themselves more and more away from dollar securities and keep their money in gold. To the point, even if transactions are done in dollars, they converted from gold to dollars, transaction is done, then once the transaction is completed, currencies are moving back to gold. That is the way it is moving right now. So keep this in mind as you see these markets moving. So if you are looking at gold and there is some reason you are interested in gold, it should be only for the short term. Like I was telling one of my friends recently, if you are still looking at an investment horizon of 10 years plus or even 15 years, please stay in equity. Do not look at gold and the way gold has moved in the last 6 months or even a year and assume this is going to be continuing for a very long time. It is not possible for this kind of run to continue because somewhere along the line, things will change. When they will change, how they will change is very hard to predict. But this kind of uncertainty cannot be maintained for a period of 10-15 years where gold just keeps running away. It's not possible. I know you've seen it in stocks like Nvidia and other stocks in corporate environment, but that is different from gold. Gold is not an investing commodity such as equity stocks are concerned. It is something which people run to in terms of uncertainty and when we do not know what is happening in the market, so we want a sense of security, so we run to gold. And this has always been the history. Like I've said in the previous video, we've always been in the gold standard, though we have had currencies like the pound, the Dutch, but all of them were backed by gold. It's just for the last 50, 60 odd years since the Nixon shock, we've been playing around without gold being behind it. A lot of you who I do meet talk about crypto. I would strongly suggest you stay away from crypto too, because there seems to be a lot of run in crypto also, and that could be vacuuming up a lot of liquidity. When the confidence in crypto goes, all that liquidity will come back to gold and gold will again strengthen. So looking at it, I do see gold going further and further up, and probably like we were talking about before this government shutdown, we're talking about 4,500. Now probably by summer, if things don't change or improve, we could even be heading towards 5,000 or close to 5,000. So in the short term, gold could be proving profitable. So if you have an investment horizon of, let's say, 2 years or less, gold would be the place you should be looking at, because it is solid, it is safe, it is secure, and at the same time, there is room for this run to continue for the short term. The reason why I don't look at equity for a period of 1 year or two, the simple reason is there's such a huge bubble in every single stock market. When this bubble is going to open up and prices return to normalcy, it's hard to say. Even before the dot-com bubble burst, do remember, the Nasdaq not only doubled, it doubled 2 times before it finally came down by 78% when the crash happened. This crash seems to be heading in the same direction. So how much more volume is there in this bubble is very hard to see. I would say you would really start seeing close to the bubble bursting is when people with, who have been talking logically, people who have been talking cogently, who have been value investors, who have been very cautious, they themselves start having FOMO and they start looking at AI stocks. I would say that would be signs that we are really getting close to where the bubble is going to burst. I don't see that happening anytime soon though. So this is what has been happening over the weekend, and this week looks like a week where we're going to see more volatility in the stock market. And as far as American stocks are concerned, I would say please be defensive. Stay away from AI. Like I was saying, look at sectors which are allying to AI, but also who have low debt and have some kind of profitability in terms of earnings. Market seems to be rewarding anything that's related to AI. So be contrarian and look for pockets of investment which is away from AI would be my advice. Even in the Indian market right now, if you're looking at where to invest, I would say FMCG companies are looking very valuable right now, and our pharmaceutical companies like Dr. Reddy are looking valuable right now. So that's where I would say things should be. So this is a bit of news which I wanted to share with you today when I was in Dubai. And tomorrow I'll try and bring Anand on as we head back to Chennai and have a deeper discussion about what is happening in the US and what is happening in Japan and what might happen going forward till we close out to the end of the year. So thanks for being with me on Be Rich today. I hope you found this video informative and entertaining. I know it was rather short and brief. I really didn't dive into anything very specific because it is extremely volatile right now, and I'm actually, like you, waiting to see what happens. Till then, find these pockets of investments. Like I said, in India, we have our list of stocks we always look at and consider. So I'm considering those. Internationally, I would say look at anything which is not related to or allied to AI, which is not overvalued, would be my suggestion. Thanks for being with me on Be Rich. I wish you a wonderful evening from here in Dubai and the rest of my team, and I'll talk to you again soon. Bye.